All right, guys, welcome back for another video. In today's video, I just want to do an update on price action and give an update on the trade I'm in. So I'm really in the same trade I've been in for over a week. I sort of anticipated price filling this gap up here. Of course, we've traded mostly sideways for a period of over a week, but I still think the trade's valid. And I want to break down exactly the type of distinctions that I'm seeing in price. Now, I marked off the quarterly open right here. So you've got your July 1st. I think that's pretty significant. I think we are seeing a quarterly pivot, objectively seeing a quarterly pivot, right? You get your Q3 open and close, and then you've got coming off this massive downtrend. Really the capitulation comes around at the end of the quarter, and then you get the quarterly open, change in trend, start taking out higher highs. This is the first X marked right there. Price starts to run for upside liquidity, which is a change of behavior. And you can see that it forms a different trending structure on the daily, right? So the series of lower highs and lower lows is no longer present. Now you've got higher highs and higher lows. You can see right here, the price did move right into this 618 retracement. That was kind of the framework for taking this trade. Now, I actually didn't take the trade. If I had traded it exactly at the 618, I would have got a much better entry. But I actually started trading it once, the lower time frame started breaking back above, right when, right in this level right up here. And there's my entry, but it's currently 196 Bitcoin position. And so basically, you get a little bit of change up in the way that the moving averages are looking. It's just basically telling you the same thing that you're seeing on the price action, right? Different trend is taking place. Now, I do need to go to the weekly chart just because the weekly chart is the framework actually that this trade was taken at. This trade was not based on the daily chart. It was actually based on a RSI principle. And I'll just pull everything off the chart. So it's based off the, pull this back, the RSI EMA. So if you guys have watched my previous videos, you know that, the logic behind this trade. Actually, FTX does not have a good amount of back history, but if you went to other exchanges, you would see that anytime price gets down to a low a low on the RSI that's extreme in historical standards, generally, once you see that, go back above the RSI EMA. That's generally very, it's going to be a bottom in price action generally. And that was actually the basis for me opening this trade. So I'll just mark this off right here. You get RSI coming down to the most extreme levels we've seen in modern history. Again, FTX doesn't have great history on the chart, but if you were to go to another exchange, you would see that RSI had not gotten this oversold really for several years. So once we got the close back above here, that's when I started looking for an entry after this close above the EMA. And now you could have just entered at the open right there. That would have been a decent play. But I think any chance you get to open that trade below below the close right here, I think is actually a much more favorable trade. And I consider that to be a pretty solid position, getting it this far below the open. Now, there's some other things going on here, and really kind of a secondary basis for this trade is the 200 moving average. Now, it looks like the 200 moving average isn't going to populate on FTX. I mean, you need to go to Coinbase to get that to populate. Yeah, here we go. So the 200 moving average, is generally going to catch the bottom on price. Boom, boom, boom. Again, we don't want to get too hung up on, price closing below it, just because, if you're too in the weeds, you may interpret this incorrectly. You may think, wow, like Price closed below there on heavy volume. Well, not really. If you just take a bird's eye view, you know, that's just a test. And generally, even this too, you know, doesn't feel that great getting this many consecutive opens and closes below. But what you see ultimately is price kind of, you know, entering a capitulation environment in that area where it typically encounters capitulation environments, right? Um, I don't have the net realized profit and losses pulled up, but if you were to go to look at Bitcoin net realized profit and losses, you would see that more realized losses have occurred in this area, uh, primarily following June, than any other time in Bitcoin's history. And now, you know, we see Bitcoin closing above, reclaiming that level. And, you know, generally, if we put the RSI back on the chart, what you see is, you know, ever since the RSI crossed above, then you see this upward momentum, and then you see a test down to the open, and then a close above. A test down to the open, close above. Not necessarily above, but you do see those consecutive tests of the weekly open, which I think is a really interesting area of interest, right? Because you know, this is an area where anybody who's still, you know, particularly bearish, right? These tests down to the weekly opens, those are going to look like sells on the lower time frames, right? So if we just mark those off on the weekly chart, just mark off the open right here, the open right here. You know, again, if somebody is bearish, right? I mean, when they may have a stop right here, or when price comes down here towards the open, they're going to start looking at this as a top. Or here, the other weekly open, right? Again, they're, you know, price came down and tested that weekly open. People may have gotten bearish at this time, and of course, then that's when Bitcoin pops up, puts in a daily low, right? A confirmed daily low at this point. Right now, you have a bunch of consecutive candles that, you know, for the most part, are just taking out the lows, and then you get this change in behavior on significant volume that closes back above the high. So really, you could use that level to mark, you know, personally, I would want to start managing risk if price got down below this level right here. Again, because this is the essentially the pattern of a you know, a local low right here, right, with your close above. And now, if that pattern were to continue to hold, right, we would expect these lows to be defended. And if they're lost, or if they're lost on a significant closing basis, you know, then that's a pretty clear and obvious indication that, you know, what we think is happening isn't happening there. So that would be a good area to start managing risk. Now, of course, if this level is lost as well, you've got your different areas laid out before you. But that, you know, again, I generally don't like having hard areas in the line where I'm taking, or excuse me, in the market where I'm taken out of my position entirely. I much prefer, you know, managing risk as the market goes towards my position and as it reaches for my invalidation. Because, you know, I think if there's anything that can put someone on tilt more than anything, at least me in particular, it's getting taken out of a position right before the market goes screaming in your favor, or at least in the favor of your trade idea, but now you're not in a position. So, yeah, so I wouldn't necessarily, you know, take the entire position. I should go over to the FTX USD. Excuse me. Let's see right here. Yeah, I wouldn't necessarily exit this entire position. Um, if we start getting closes below 22,222, roughly. But that is the area where I'd start managing risk, right? And then, um, you know, in that region generally, you know, at least pull off some of the excessive risk that I have on the current position. So, but then again, you know, it's not a hard and fast line in the sand. You know, price could come down here and run liquidity down here and then do something different. Again, this is not a guarantee, but just going back to the original trade idea right here, I have to frame that in the context of the original trade idea. And this is totally based on the RSI EMA down here. So now price would cross down the RSI EMA if price goes below 21912. So let's put that 21912 on this chart. Let's see if we can get this up here real quick. It's roughly right there, more or less. Now, again, that is a weekly level. So this is the area where if we got a weekly close below this level, my trade idea would be invalidated. So that would be really where I pull off the entire portion of my risk on the trade on a weekly close below 21916 roughly. Again, that's a weekly close, so we're pretty far away from that. I mean, we've got the weekly close here coming up in 15 minutes roughly. Now, anything barring a total nuke on price, we're probably going to close above that weekly close. The trade idea is still in effect, and no reason to manage the overwhelming majority of risk on the position. Just put a few hedges in the market. But again, if we do see next week's close below that level, then the trade idea is invalid. Doesn't mean the world's going to end. It just means that the trade idea is invalid and there's nothing else to do. Time to close the position. Anyway, I hope you guys like this update to the Bitcoin Trading Journal series. Again, please make sure to leave a like on the video, subscribe to the channel, and I'll catch you guys in the next upload.